Bitcoin, it's the asset of the digital age, promising to revolutionize wealth and bring financial freedom to everyone. But what if I told you going all in on Bitcoin might not be the dream it seems? What if it's a move that could harm you, not just your finances, but the entire global economy? Let's explore both the opportunities Bitcoin offers and the risks we need to avoid for a sustainable future. Please, if you like this content and you get any value out of it, please subscribe and like this because it will help my channel a lot. Thank you very much. Enjoy the video. Let's start with why Bitcoin excites everyone. Okay, so scarcity and decentralization, that's the key point they sell to everyone about Bitcoin. Okay, so unlike fiat currencies, Bitcoin is limited to 21 million coins, making it a hedge against inflation. Its decentralized nature eliminates the need for trust in central authorities like central banks like Bank of Canada or Federal Reserve. Nations like El Salvador have adopted it as a legal tender, which shows the adoption curve is getting bigger. And companies like Tesla and MicroStrategy hold billions of dollars worth in their portfolios. Wall Street is also joining the fray with Bitcoin ETFs like Vanguard, BlackRock, Fidelity, and many more are also joining. With global wealth estimated at $900 trillion, Bitcoin has the potential to capture value from unproductive assets like gold, low-yield bonds, and even real estate. These factors make Bitcoin a powerful tool for financial empowerment and freedom. But every silver lining has its cloud. So let's turn to Canada, our own country, where residential real estate became the ultimate store of wealth. Over decades, massive investments in housing created a bubble. Prices skyrocketed, making homes inaccessible for younger Canadians. Boomers, on the other hand, hold the most of this wealth, deepening generational inequality. Worse, this obsession with real estate drained capital from unproductive investments like funding for startups, technology, manufacturing dwindle, leaving Canada with slow economic growth, like the lack of productivity growth we have been always talking about on this channel. So what's the lesson here? Investing too heavily in one asset class can hurt the broader economy. If Bitcoin absorbs a disproportionate share of global wealth, we could see similar issues on a much larger scale. The online community has raised a valid concern about Bitcoin. Some argue that early adopters started to control a significant portion of Bitcoin's fixed supply, creating a new elite class. For example, let's talk about the wealth concentration. Much like Canadian real estate, Bitcoin ownership could become centralized, making it harder for new participants to benefit. Without productive value, Bitcoin's price is driven by speculation, making the market volatile and risky for ordinary investors. If Bitcoin becomes the dominant asset class, these trends could replicate the inequalities we see in real estate today, but at a much larger scale. Economic growth depends on productivity, building infrastructure, developing technology, growing industries. All of these things are needed for economic growth. If too much capital flows into Bitcoin, these essential areas might face underinvestment. Fewer investments in agriculture could jeopardize food security. Reduced funding for startups could slow innovation in healthcare, AI, and renewable energy. Infrastructure projects might stall, delaying critical advancements for the future. Bitcoin is a powerful tool for sure for wealth storage, but it doesn't create jobs. It doesn't produce goods and services. It doesn't invent technology or build bridges. So how do we embrace Bitcoin responsibly? Well, let's talk about the diversification. So treat Bitcoin as a part of a balanced portfolio. Productive investments like infrastructure, startup, manufacturing should remain key priorities. Smart regulations. I think this is where government can play its bigger role and also force banks and organizations like OSFI to hold them accountable. They must incentivize the capital flows into essential industries while managing speculative bubbles. Like they should not allow leverage going into these asset classes. So Bitcoin has immense potential, no doubt about that. But with greater power comes greater responsibility. We must learn from past mistakes like Canadian real estate bubble to ensure a balanced and sustainable future. If you found this discussion insightful, hit the like button and subscribe and share your thoughts in the comment section below. And I'll see you in my next video. Take care. Sorry for the interruption, guys. Just wanted to let you know that I also offer one-on-one consulting calls to the individuals who are looking to discuss their financial planning, their investment strategies, their kids' education planning, their immigration moves, as well as the young professionals, because I have been in the tech industry for almost 20 years. So I also offer one-on-one consulting calls to the young professionals who are looking to have their career development discussion with me, and also personal branding as well. So if you are looking to have some sort of an expert opinion, there is a calendar link in the description below. Book a 30 minutes call with me and I will be more than happy to help you out. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. If you are interested in reading about these topics like macroeconomics, financial markets, what's happening with the geopolitical situation, what's happening with interest rate, monetary policy, Federal Reserve, ECB, China, Japan, I cover these topics in a very simple and plain English in a very digestible format. If you like to read about this, there is a link in the description about my newsletter that I send out every week. Do yourself a favor, click subscribe, and enjoy reading. Thank you.